Welcome to my Realtor Hat series. I am Tanya Cunningham with Tanya Homes Group, and I put on my Realtor hat today because I wanted to speak with Rabecca Eunis of the Eunis Group, and she is a CPA. Not something that everybody gets excited about, but everybody needs to know and learn something from their CPA so that they can make the right decisions. So you might have a lot of questions about what to write off, if you can write off things, and so on. And we get to talk about that a little bit today. So sit back and enjoy. We hope this is of value to you. And I'm going to be speaking with Rabecca. So let's talk with her right now. Hi, Rabecca. It's so great to see you.
Hi, Tanya. You too.
Thank you. Thank you for sitting with me. I'm so excited about this.
I know. Thank you for asking.
Of course. So one of the things I love to ask first is out of curiosity. I never ask this, even when I know someone who's in business. How did you start out to become a CPA? How did that come about?
So I've been doing this since I was 12 years old with my dad. I think I was groomed for it. I'm a second generation CPA.
Wow.
I either had to work on the weekends with my dad during tax season or my mom, who was a hairstylist, and I chose the math piece of it. I've been in business since I was 12 with him, and then graduated from Bryant University and hung a shingle with my husband, Eric, God, over 25 years ago. So
Wow. Wow. That's crazy. So now you and Eric have been in business forever and just really helping people with the thing that I actually run away from the most, which are those numbers.
no, the numbers tell the story. They are
I know.
everything. They are
I know.
everything.
And I appreciate you and Eric for that because you help me so much where that's concerned.
We
So,
always we tell everybody the numbers are the sexiest part of the business, no matter what.
oh my gosh, it didn't feel sexy, but I guess you're right. Well, thank you for sharing a little bit about how you started. And one of the things that I want to talk about today is the fact that it happens over and over and over again where I have clients who are referred to me and they're self-employed. And the first thing I ask them to do is talk to the lender. So because I want them to share with the lender what their net income is, because they don't realize that the write-offs that they do for their business can affect them getting a home. So can you share what that means?
Oh gosh. So we have that happen all the time in our world because we're the ones, the client will call us and say, hey, by the way, I need a copy. Can't find mine. Send me my copy. And we'll ask why, what are you doing? And they're like, gonna go get a mortgage. And we're like, okay, so you realize what your adjusted gross income was last year because of the write-offs that you took on Schedule C, which is where most small business owners file their tax returns. And even if it's not, even if it is an S corporation, that's funneling to their personal return. And they don't understand that they get so aggressive with taking these deductions that it affects how the lenders are going to calculate the number that they qualify for, because it's not based on the gross, it's based on the net, and the net is gross minus all those expenses. And unfortunately, sometimes what happens is that comes up and bites them in the end because it's a double-edged sword, right? You want to take the deductions to save the tax dollars, but yet when you want to buy that house, now the numbers are not working. And then there's more out-of-pocket cash that has to happen at closing, or, such things like that. A lot of times we have to present profit and losses current year and sign off as the accountant verifying that the numbers are what they are, but usually it's based off of filed income tax returns.
Yeah, and I see it happen so much. That's why I wanted to have this conversation, because when I have that conversation with my clients and explain to them why it's important for them to find out exactly what their net is, they're like, but I grossed blah, blah, blah. And I was like, no, 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 no. We got to look at what you netted, because that's what the lender is going to be looking at. And they're in shock. So sometimes my clients have to wait another year or another 2 years, dependent on what's found out. So I don't want that to happen to anybody out there who's looking right now to purchase a home. I want them to be ready and prepared. So thank you for sharing that. Thank you.
Yes, of course.
So the other thing I want to talk about is there are W-2 employees out there as well. I want them to benefit from whatever they can regarding taxes, because a lot of the times you hear about businesses, benefiting a lot in terms of what they can write off and what they can't. But what can a W-2 employee do such that they can really benefit when it comes to tax planning?
So that's a great question. And we have several people come to us and say, I'm getting killed in taxes here.
Yeah.
I'm making money on my W-2 and I'm maxing out on my retirement plan and I'm doing all the things, right? But I'm phasing out of things or I don't get all these deductions because all I have is my W-2. And what we found is that it's a great opportunity for people like this to get into investment property, whether it's acquiring for Airbnb, like acquiring a piece of property to utilize as an Airbnb or just a straight rental. What that does is it puts them in a different category because now that's kind of technically owning a business.
Yeah.
And there's more write-offs that can happen against that. And 9 times out of 10, initially, when you're acquiring a piece of property for rental, you're showing a loss, generating a passive activity loss. And as long as your adjusted gross income stays under a certain level, and we don't want to get too technical here, but as long as you don't exceed the limitation, you're able to deduct that loss and save yourself on some taxes. So it's a tool that can be utilized, number one, to reduce taxes, but number two, to increase their net worth and their cash flow.
Right.
So it's a win-win. And we find ourselves assisting straight W-2 employee families with those tax planning tactics as well. And I think, we had touched upon this, you and I, off camera, but one of the things too is that the tax law is changing so much for business owners and individuals that it does make sense to tax plan, even if you think you're just a W-2 earner. But if you're a W-2 earner with a kid in college and you're looking for college write-offs and you're looking for, maybe you have dependent daycare, if your income is too high, you're not going to get those deductions. And that affects how much taxes you're paying in. So it's definitely good to tax plan either way, whether you're a business owner or an individual, to make sure that you're maximizing what you should be maximizing.
Great. Thank you for that. And even the person who isn't purchasing a home as a rental property, just purchasing a home and having your own home, there's so many benefits just from that, instead of just being a tenant out there. And in this, and the way things are, it's really great because rents are so high. When somebody owns a property, they're really in a good position. So I really appreciate you sharing this with me. And the one thing I get from all of this, and that this is why I can't do it myself, is have some tax planning in place, have a CPA, someone who can really guide you, who knows what they can share so that you can really be prepared no matter what the economy we're in, right?
1,000%.
Yeah, well, thank you, Rabecca. I really appreciate you again. And please, before we go, tell us the best way someone can reach you. We're going to put it here, but I want you to just tell us, is it by phone? And if so, what's the number? What's the best way to reach you?
Actually, our website is theunisgroup.com and our email address is right on that website. For any outsider wanting some information, they can just pop in there and shoot us an email and we'll respond usually within 24 hours. We get back to you.
Perfect. So theunisgroup.com, and we're going to place it here for you. And this is Rabecca Eunis with the Eunis Group. And thank you so much. I really appreciate you. And we'll be talking again. You'll be seeing me soon.
Awesome. Thanks, Tanya.
All right, Rabecca, my pleasure. So you heard it from Rabecca. The numbers are the sexy part of your business. So get excited and reach out to Rabecca. If you have any questions, she'll be more than happy to help you. And if you need an amazing CPA, you have to look no further because you've just found one at the Eunis Group, eunisgroup.com. All of the information is here. And of course, if you're looking to buy or sell a home or have a friend or family member who is, you know where to find me. I am Tanya, and you know it. We wear the hat to bring you the facts.